Alright guys, let's just do the reporting on cost information. When we do the reporting on cost information, we're going to be focusing on financial statements of a manufacturing business, and it consists of the production cost statement, income statement, and balance sheet. For grade 12, we are only going to do the production cost statement and the short income statement. The production cost statement is used to calculate the cost of production of finished goods produced during the financial year. The cost price of finished goods sold can be determined. The cost of sales amount is then carried over to the income statement. The income statement is used to calculate gross profit by taking sales minus cost of sales, and then you minus your period cost, which is selling and distribution cost, as well as administration cost, to determine your gross profit. And we will be going through other notes as well that will help you calculate the cost of production of finished goods. Okay, we have the following process will be taking place. Obviously, production cost statement starts with direct material, then it goes to direct labor. You add the two, those are your prime cost, and then you're going to add factory overheads to determine your total manufacturing cost, and then you're going to add work in process at the beginning of the year. Those are cost of finished goods, unfinished goods from last year. That is the cost of unfinished goods from last year. You're going to add them because those goods will form part of finished goods this year, and then you're going to minus cost of unfinished goods at the end of the year, and you will determine what we refer to as the cost of production, which is just the cost of goods that we have finished this year. All right, and under income statement you will have sales minus cost of sales, but note that cost of finished goods will form part of cost of sales, right? Part of it, obviously, and then you're gonna less sales and distribution and administration cost to determine your net profit for the year. This is the format of your production cost statement. It starts with direct material. So you're going to have your direct material cost. You add your direct labor. Direct material plus direct labor. Remember from the previous video, as I said, direct material plus your direct labor will be equal to prime cost. And then you're going to add factory overheads. You will get total production cost. Then you're going to add work in progress or work in process. At the beginning of the year, you minus work in process at the end of the year. It'll give you cost of finished goods. It'll simply give you cost of finished goods. This note will always be the same. I'm actually shocked because I have some grade 12s that can't do this note, and they used to get 100% in this note in grade 11. Guys, it will never change. It'll still remain the same. It'll always be in this form and it'll never change. And you have people that can't figure out what goes into the statement. I mean, general knowledge, guys, that based on what you've learned, it's just direct material cost, you add direct labor, you get prime cost, you add factory overheads, you get your total manufacturing cost, and then you add your work in progress at the beginning of the year minus work in progress at the end of the year. You will get your cost of finished goods. Okay, now to prepare this statement or this cost production statement, you need to prepare these notes first. Now I'm going to start with my direct material. Direct material, it starts with opening balance of your raw materials. This will normally be part of balances at the beginning of the year. Is the end of, if the end of the financial year is the 28th of Feb 2020, the beginning of the financial year will be the 1st of March 2019, and you're going to put that amount there. It will be given as a balance. You look for balance of raw materials at the beginning of the year. And for your purchases, I've just included something there. For your purchases, it's always cash purchases plus credit purchases, you minus returns. Yep. Yeah, there are people that still get this wrong. I don't know how come. And then you're gonna have carriage inwards. Carriage inwards is the cost of transporting raw materials from the supplier to the warehouse. Those costs you're gonna put them as transportation cost of carriage inwards. That is carriage coming into the business. Okay, cost of transporting raw materials into the business. And then you will add custom duties. Custom duties, we did that in grade 10 as well. Custom duties simply represent the cost, the tax on goods that are imported from overseas. Okay, now you're gonna take this. I've shown you where that number one will go. It'll go straight to your production cost statement. And then let's go to direct labor. Direct labor, we've got gross salary, but gross salary is normally basic salary plus your bonus. But this is the wages or the salaries that goes to people that are physically involved in making the product. Normally, those people that are involved in making the product, they get paid a wage. Okay, so that is how you calculate the wage. And then you're gonna include contributions by the employer. Contributions by the employer are added costs, all right, and hence you're going to show them separately, and you're going to add that to direct labor to determine your cost of direct labor. I've also shown you where number two will be recorded. And then we're going to go to factory overheads. Factory overheads, you focus more on, it starts with direct, indirect wages. That is the salary paid to a factory supervisor, a factory bookkeeper, or factory security guard, or factory foreman. Foreman and supervisor is one and the same thing. Those are the people that monitors that direct labor, people that are making the product are doing the right thing. They're making correct calculations. They are assembling the product correctly as per the directions, right? And any contribution towards indirect labor will also be included as part of factory overheads. And then you're going to have rent for factory, water and electricity for factory, depreciation on factory equipment, and then you're going to have indirect material. You understand everything that goes into factory overheads must be factory, 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 factory. You can't have rent for office. That goes to the administration. That is part of administration cost. Everything here is factory, 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 right? And for your indirect material, to determine your indirect material, you're going to take your indirect material opening balance plus indirect purchases of raw materials minus returns of indirect material. It's purchases of indirect material minus returns of indirect materials, and then you minus the closing balance of indirect material. Whatever value you get, you will simply put it in there. This working out is very important because it's marked. It is marked. That is why it's very important for you to show this in brackets all the time. Okay. Before I get to that income statement, I just want to show you guys this number 3 here. is that number 3. So basically, you're going to add it with prime cost to determine your total direct total cost of production, and then you're going to add your work in progress at the beginning of the year, and this amount here. I will show you later where it will be recorded. Manufacturing income statement will basically look just like a normal income statement. You have sales minus cost of sales, you get gross profit, and then you minus your selling and distribution, you minus administration cost, you get your net profit. This is what I wanted to talk about, which is your cost of sales. You will simply look at the cost of finished goods at the beginning of the financial year. You add the cost of finished goods that we produced this year. It is the one that I marked with a star. It comes from it is the total of your production cost statement. That total will be the one that you're putting in there. You're going to add it with opening balance and then minus closing stock, the value of your closing stock of finished goods. Note that your balances will be different. There will be opening balance for raw materials. That goes to note number 1. And there will be opening balance for finished goods. That comes here. All right. And then there will be opening balance for indirect material. That goes to factory overheads. Okay. So you will be given those balances. And obviously you will actually use this to determine the cost of sales. Please note that this value here forms part of your trading stock. It's cost of finished goods at the end of the year that will only be sold next year if they were not sold this year. Under selling and distribution, you've got commission on sales. You pay commission to your sales people that are selling your stock, advertising, bad debts, depreciation on delivery vehicle when you deliver goods to customers. That will be part of your selling and distribution. And we're going to have administration. You have salaries to office salaries that will be part of administration. Pension contributions will be part of administration. That relates to office salaries, all right? Depreciation on office equipment. That is equipment used in the office. It goes to administration cost. Stationery goes to administration cost, especially if it's used for admin. When you're given stationery, just know it goes to admin unless stated otherwise that some of it was used in the factory, and then you're gonna have to apportion it and determine how much went to the factory. Okay. And this will be it with respect to your production cost statement. Please, I will send a video link for you to watch 13.2, and I will also make a video for 13.3.